Financial leadership is changing. CFOs no longer record history. They make history. This podcast will help you become a better leader, strategic thinker, and digital visionary. Welcome to Secrets of Rockstar CFOs, the ultimate podcast for chief financial officers. Follow along as Jack McCullough engages in exciting chats with accomplished CFOs, learning how they overcame obstacles and positioned their companies for the future. Here's your host, Jack McCullough.
Hello, everybody, and welcome to the Secrets of Rockstar CFOs. I'm your host, Jack McCullough, and you can follow us online at rockstarcfos.com. Fantastic guest today, so let's rock. I'm really excited to welcome our guest. Her name is Alison Staloch. She is the CFO at Fundrise. Alison, welcome to the Secrets of Rockstar CFOs.
Thanks, Jack. You have an amazing reputation within the finance community, and so I'm so thrilled to talk with you today.
Well, that's very kind. And before we joked on, there's a lot of controversy on the internet about pronouncing your last name. I hope I was reasonably close. So
you got it right. You got it right. Staloch. Yeah.
How about that? So anyway, Fundrise, I have to admit, I wasn't familiar with it until you and I started talking. And I thought, wow, this would be a fascinating company. But for the benefit of our listeners, most of whom I'm guessing aren't familiar, can you give us the 10,000 foot view?
Yeah. So Fundrise is an alternative asset manager fintech platform. So we are direct to investor. We offer access to diversified portfolios, primarily of real estate, private credit, and venture capital investments. And we offer those to individual investors through our platform at accessible investment minimums, generally as low as $10.
$10?
Yeah.
That...
Possible.
Okay, so we're going to have to send a link to everybody. There's no real excuse not to invest when there's a $10 minimum. So that's fantastic. But I'd love to chat with about you in a moment about some of the challenges that you're facing, the opportunities, and how you're helping the company grow. But before I want to chat a little bit about your background, which is a little bit on the unconventional side for a CFO. Although you started off on the right track. Your dad was a tax partner, right?
That's correct.
Yeah.
Yep. He spent 35 years in public accounting.
Okay. Wow. So perhaps you were destined to be in finance and accounting for a profession. But, although you grew up on a farm, right?
No, so I did not grow up on a farm. My dad did.
Oh, your dad grew up on a farm. Okay.
Yeah, that significantly influenced our upbringing. I think work ethic was just kind of always a trait that was really important in my family because of my dad, probably both growing up on a farm, the physical labor aspect, and then growing up or spending, his entire career in public accounting, where I'd call more like intellectual labor. But yeah, work ethic was always really important.
Yeah, those are two of the hardest ways to make a living, I have to think. Yeah, but in very different manners. So,
yeah.
Cool. But anyway, so you weren't immediately going into business. You studied psychology in undergrad, or you started off that way anyway, right?
Yeah, so I went to undergrad at Miami University in Oxford, Ohio. I was pre-med, and we didn't have a med school, so my major therefore became psychology. And I think I avoided accounting. I avoided even any business classes in undergrad, much to my father's dismay. Ultimately, ended up going and getting my master's in accounting in grad school. But I think that psychology degree, has really helped inform my work today and throughout my career. It's probably obvious to your audience that, human psychology is critical in any leadership or management role. I think empathy, emotional intelligence, both self and social awareness, these things are kind of fundamental to being a manager of humans. And so, it's not that what I learned in college was so useful, but I think it set a foundation for an interest. And in order to be good at those things, empathy, emotional intelligence, I think you have to be working on it all the time. And that's, again, been really critical to both working with people and managing and leading teams.
Yeah, it's interesting because for some of my presentations, I've spoken to like investors and CEOs and board members about what they value in a CFO. And none of them mention like technical skills or even like finance skills. Empathy is up there, resiliency, and the ability to inspire people, both inspire trust and inspire confidence. And probably a background in psychology or psychiatry or anything of that type of science is probably extremely helpful, right? You sort of have a better understanding of human nature a little bit.
Yeah, I think, you have to start with understanding yourself And so learning to recognize your own biases, narratives, why you think about things the way that you do. And then that can really help you, put yourself in the shoes of your colleagues or your direct report or any stakeholder like a board member. What do I know about this person that could help me to understand why they're reacting this way or thinking about the problem in this way, or, how can I best work with them?
Yep. And that's kind of the difference between being a manager and being a leader in many ways.
Yeah.
So, yeah. So cool. So anyway, you and I were briefly colleagues. You started your career at KPMG. So what was that like for you in terms of setting a ground for a future CFO?
Yeah, I mean, I think you learn so many fundamental skills when you start out in public accounting. I started out in the audit practice. I worked across a variety of industries when I first started. So I really hit manufacturing, retail, real estate, investment management, insurance, banking, like touched all kinds of different industries and really built that kind of like fundamental skill set in learning about accounting, financial reporting, and even audit and compliance. So I think that's, been critical to have built a skill set in one of the many disciplines underlying finance. But, I think what I took away from my time at KPMG, and I was there for a decade. So, I spent a lot of time in the audit practice. I was thinking back on my experience, actually, as we thought about having this conversation. And an anecdote that I recall, I worked on an engagement where the partner used to tell the team, the work we're doing is ensuring that the capital markets function. What we're doing, we make the capital markets go round. And I took away two things from that. One, like it's a really good lesson in how to motivate young staff.
Yeah.
Tell them how important the work that they're doing is, and it is important work. I have a deep respect for the auditing profession. So, I think that was a good lesson in how to inspire teams. But maybe now that I'm looking back on that comment, and I think your audience who has worked in other aspects of the capital markets, they might find that statement a little narrow. And I think it's emblematic to me of the narrowness that we're all susceptible to. So we get so caught up in the narrative of the importance of our own job, why our chosen profession is so critical, or even why our department or our function's outcomes are of the highest priority. And so I think if you let yourself go down that path too far, you kind of end up lacking the curiosity to see the world or the work or, whatever it is realistically. And so, the lesson that I think that I took away the most from KPMG was from my time at KPMG was how critical curiosity is. And I think you have loads of opportunities to explore curiosity when you're in the audit profession. You're getting like the back end view of a business. And so looking back, some of my favorite experiences were doing like the inventory counts or the plant tours or attending board meetings or even just like a walkthrough. It was an opportunity to learn how people do their work, how these businesses operate. And so I think the lesson for me has been that getting broad experience to manage against that bias that can come from 10, 15, 20, 30 years doing the same thing. It's critical to a finance role to, especially appropriately evaluating risks, to connecting with other people, to communicating well, and to reaching conclusions that result in the best outcome for your business.
Okay, that's great. And it's an interesting observation though, because I wouldn't have articulated it quite as well, but I just remember thinking like early in my career and then looking back on it, like auditing, a lot of responsibility for a 22-year-old, right?
Yeah.
I mean, there aren't a lot of other jobs that are assigned to 22-year-olds that have that type of consequence. And, and the ones that I can, like a nursing would be, in a very different way, but there's a lot of responsibility there. But in terms of like office type jobs, boy, there's a lot of pressure on doing your job right and being part of the team that executes really well. So, but
yeah, and I think that's what's so engaging about the public accounting profession and what makes people stay as long as they do, right? It's hard work, but you have a lot of responsibility very quickly. You get promoted very quickly through the chain. There's always kind of that next promotion, and new hats to wear. And so I didn't plan on staying long in public accounting. I went in thinking I'll do a couple years and move on. But I ended up staying 10 years because there was constantly a new challenge and new responsibilities to take on.
yeah, I worked in public accounting in the 80s, right out of college. And then I came back, same firm. It was Pete Marwick and Mitchell the first time, but KPMG is the same firm. And I worked there in business development 2010 and 2015. And it's remarkable how different the game was.
Yeah.
public accounting, and yet its core mission was sort of still the same, right? So,
But the way they did the work, definitely changed over that time period.
You lasted longer than I did. I did 3 years the first go round. I got my
Okay.
CPA and said, this is just too hard. So moved on to other things. But well, that's great. So you put in 10 years at KPMG and then you took a position at the SEC. Can you tell us a little bit about that?
Sure. Yeah. So I joined the SEC in 2015 on a fellowship role. So as an assistant chief accountant in the division of investment management, that's the division that regulates registered investment companies and registered investment advisors. In late 2017, I took on the role of chief accountant for that division. And so in that role, my office kind of had twofold. One side of the team really focused on disclosure review. And so Sarbanes-Oxley, there's a statutory mandate that the SEC staff review the financial statements of every issuer every 3 years. And there's about 15,000 registrants in this space. So that team was doing about 5,000 financial statement reviews a year. They were excellent at it. Many of them had been there since the beginning, since Sarbanes-Oxley was passed and that mandate was issued to the staff. And their work resulted in a lot of consistency within the registered investment company space in terms of financial reporting. So really important work, but they were really excellent at doing that well. And then the other side, where I spent more of my time, was probably on the policymaking side. And so that included, working with our colleagues in enforcement and exam to give them technical auditing or accounting guidance as it related to registered investment companies. We worked through the Office of the Chief Accountant with the PCOB and the FASB on their standard setting process. But probably the thing that we did the most was assist in rulemakings. And so helping to set policy, very big picture, very strategic work, thinking about, how will this regulation impact industry and investors, learning from different industry stakeholders, their points of view, coming up with your own point of view, and then, trying to get that accomplished in a rulemaking process. And I think, one of the most important things I took away from my time at the SEC, it's obviously a government institution, so there is some bureaucracy there. But I think regardless of bureaucracy or not, relationships are just critical to getting anything done in your work. And I think that especially in policymaking, I would argue that it's a huge part about that is about relationships, about building trust, and really getting someone to believe in the change that you believe in. And so, I think that was probably when I reflect back on my time at the SEC, it kind of solidified that investing in relationships is so critical.
Interesting. I've known a few people at the SEC, and you sound like you had one of the most interesting experiences that the people I know, a lot of strategic type of stuff within that environment. So it's fairly obvious, so I won't ask why Fundrise would find you intriguing as a potential CFO. But the other way around, how'd you come across the company? And, what about the opportunity was exciting for you?
Yeah, well, that's kind. And I feel very, very fortunate to have found Fundrise. I initially had a call with our CEO, Ben Miller. He's also our founder, one of our founders. The company's been in existence for about 12 years. And the thing that really, obviously it's in my industry. We're in alternative asset management. I worked in investment management industry kind of throughout my career. What really struck me in my first meeting with him, as I was, thinking about as a regulator and as an auditor, you hear a lot of institutions talk about why they do what they do. In all of my career, I'd never heard a more authentic passion for serving individuals. And, as someone who had spent my entire career in investor protection type roles, whether as a regulator or as an auditor, that really hit me. That really drew me in. So I think that was kind of the mission is really the first reason that I was interested in joining Fundrise. And then, again, it comes down to relationships for me. Then it was the people. You don't really talk about cultures where they do the same things that other companies do. I think great cultures are distinct. And by nature of that, they're not for everybody. And what I experienced in meeting a group of people over several months while we kind of discussed the possibility was just how much the people and the team resonated with me. Very high humility and high talent. I think everybody says that. Smart, low ego, right? But I think we would say the third prong in what we look for in hiring is this high curiosity, critical thinking, judgment skill set. And so that culture really resonated with me. I was really excited about joining this team. And then I think finally, from a personal perspective, it was the entrepreneurial opportunity. And so, building something, having big impact, taking a risk, doing something late stage versus joining an institution where you can have smaller impacts to kind of already successful, mature businesses. I was just much more interested in doing that.
Yeah, I mean, culturally, it's quite different from either of the two prior roles, but I can certainly see why it excited you and why you took the opportunity. But I'd love to get an understanding of the team you have at Fundrise. Can you tell
Yeah.
us a little bit how many people in the finance and accounting functions?
Yeah. So today there's probably about 50 people that serve in a finance role. It was about 25 when I started. So we've grown that pretty considerably, although, we've been looking at resourcing models and some of that is changing. But it's because of the environment in which we operate, heavily regulated. There's a lot of compliance, a lot of accounting work. And so we have real estate accounting team, a fund accounting team, and a corporate accounting team. So it's a lot of accountants actually.
So,
And we do outsource some of that. We've moved to outsourcing some of the kind of like daily fund routinized administration and accounting work. But yeah, it's heavily an accounting operation. The company has kind of always invested in this regulatory discipline from the beginning. And so, when I came in, I knew that was already kind of the standard. Because of the way our company and our funds are structured, we end up doing, probably close to 20 audits a year, and financial reporting on both an annual and semi-annual basis for all of
20
the
audits. I'm sorry to interrupt, but I can't help myself when I heard 20 audits. Good God.
Yeah. I mean, most of them are fund structures.
Okay.
So, but some of them are under, a real estate accounting model, and some of them are under a more of a fund model. And then, of course, we have the corporate entity, the parent entity as well. So, yeah, so lots of auditing work that we do.
Yeah, it sure sounds like it. But I apologize for that interruption. But sometimes my mouth just says that to me. So
Yeah, no.
well, one of the things I won't say unique, but relatively rare with a team this large is you're all remote, aren't you?
We are, yes. So yeah, that's kind of a different approach. I mean, obviously post-pandemic, lots of people have gone remote, lots of people have gone back into the office, and lots are hybrid. And I think, there's no right answer. I think it has to work for your company. What happened for us was that during the pandemic, and including before my time, we started to be able to find a lot of talent outside of the DC area that we weren't able to find pre-pandemic. And so if you think about like engineering talent as an example, there's not a ton of engineers in DC, and you can find really great engineering talent across the country. And so that helped us in our growth, and that helped us to find the talent that we wanted. And I think we made a decision that we didn't want to go back from there. So today, about 60% of our team resides outside of the DC area, including myself. But we do still maintain a headquarters in DC. I think the thing about being an entirely remote company, which, we're in the process of figuring out, is you have to adopt new practices and processes to support that approach. And so, one of the things we've started to do is think about more regular on-sites and bringing people in. Mostly, I think there's a lot of reasons you do it, but I think the biggest reason is to build the relationships amongst the team, both cross-functionally and within a department. We like to talk about this concept. Our CEO talks about this concept called MGI. It's most generous interpretation.
Okay.
I'm pretty sure you got it from a parenting book, but it applies to, teams as well. And I think the way I think about it is that the better you know someone, the more rapport and trust and relationship that you've built with them, the easier it is to get to the most generous interpretation of their behavior. And that's really hard to do just through a screen. If you only know someone, on a screen, and you don't know them in 3D live, you've never met them, you've never heard about their family or their pets or their hobbies or things like that, it's a lot easier to kind of default away from the most generous interpretation. And so I look at those on-sites as a way to, kind of build up that, kind of initial inclination to go to MGI versus making some other assumption.
Interesting. I've somehow managed to live 6 decades without hearing that one before. But I'm definitely stealing it. And a little off topic, you happen to be a fan of the TV show, The Game of Thrones?
I am a fan, although I haven't finished the series, and I know that's
there was a character, Littlefinger. I'll see a few names like Lord Baelish and a couple of others. But anyway, he had a thing, assume the worst. It was the exact opposite. Yeah. He said, why don't you assume that everybody has the worst possible motives and see if that explains why they're acting like they do. So he may not fit in well at Fundrise at all.
Well, Or maybe that's a good way. Pessimistic approach when you're assuming things about the behaviors of your competitors, but do the opposite when you're thinking about your team.
Yeah, I mean, I'm in just like you. It sounds like I'm a natural optimist, and I think if you're just a pessimist, boy, you're just limiting
Yeah.
opportunities and outcomes, right? I mean, if you just think everything's going to fail, so no, that's fantastic. And I want to talk to you a little about the executive team.
Yeah.
And if I have my facts straight, there you have an executive team of 8, and you happen to be the only woman on the executive team. So I'm wondering, how that factors into anything, if at all, and perhaps it's a non-issue.
Yeah, I think it's a non-issue. I think a lot of companies find themselves in some type of kind of lacking diversity when you think about the founders of a company. Most of the remaining 7 are founders and/or have been at Fundrise for a very long time. So, I often joke with them like, remember I missed the first 10 chapters of the story. But I think the most interesting part of that dynamic is that, which is that they've been around a long time, they've learned all the lessons real time that the company kind of has built its foundation on, and so it's been really important to me to build my relationships with those team members. So we meet monthly in person as an executive team for a long afternoon, often turned into evening hours. It's been critical for me. They obviously have a foundation of having, worked together in the office prior to the pandemic. But I think it's been critical to us as an organization to be able to spend that time together. I mean, number one, like I said, investing in relationships, building the rapport necessary for trust and collaboration, but then helping us to align on our differing perspectives. And so reaching conclusions that optimize outcomes for the business as a whole rather than one of our departments or functions individually. So I think, for example, like I will often come at a problem or decisions from a financial ROI perspective, but let's say our chief product officer is going to be laser focused on the investor experience. And ultimately, all of our decisions at Fundrise come down to what is best for the investor. But there's obviously a lot of different ways to think about that. And so I think having that outlet to work together, having the rapport to trust and collaborate and share perspectives has been really, really critical to us.
Yeah, that's what I always observed. Like everybody felt certain that their own function was the critical one.
Right.
It's like the people who make the products. Nope, just if we make great products, everything else will fall into place. And
Right.
the marketing people are like, no, you need to understand the markets and everything else. And sales are like, nope, it's all about the customers. You don't have a business without them. And they all have a valid point. I guess that's the value of diversity of thought in this instance. So
I would say like our CEO actively like fights against that. Like he's very biased that, no one department or function is the most critical. And so I think he kind of sets the tone for we have to work together and we have to reach the best outcome. The best idea, the best decision for the business always wins.
Yeah, it's funny because in my life, I've been a CFO and I've run business development. So I've worked at companies and people will watch me have a debate with myself. Like, are you arguing with yourself? I mean, you're taking both positions. Like, yeah, yes, I am. So, but you mentioned the CEO, and in a lot of companies, that CEO CFO dynamic is the critical one. It's the person, the trusted advisor, the person that they trust the most. But at your company, you also have a COO who plays a prominent role. So I want to talk a little bit about what that relationship is like with the three of you, because you have, different perspectives and whatnot. But how does that work at the company? And the CEO and COO are both founders. Is that correct? Okay.
That's
So
correct,
they did read the first 10 chapters.
They did read the first 10 chapters. Yes. They were there for the building of the first 10 chapters. Yeah. So both Ben and Brandon are founders. Our CTO is also a founder. And, I would say we have a very active executive team broadly. So I think everyone's very, very involved in decision making. But the way I view my relationship with Ben and Brandon specifically, I think they're the vision. They're both very visionary, very brilliant, very passionate about this mission. And, as an outside CFO, someone coming in, not founding the company, I view my job as, operationalizing that and executing on their vision. And so I think building rapport with them has been critical. Building an understanding of their vision is really critical. I mean, I would tell any aspiring or current CFO that, investing in those relationships, like you can never invest too much, right? it's really critical for a CFO to be, close to the CEO and or other founders and those with the vision of the company. So the importance of collaboration and building a relationship with those people can't be understated. I think that the longer we've worked together, the easier it has become to have difficult conversations about what we think is going right and wrong. And again, I think that's about investing in the relationship and spending time getting to know each other.
Okay. It's interesting. And also, oftentimes it's the CFO may be the only person there to challenge the CEO, right? I mean, no good CEO surrounds himself or herself with yes people, but sometimes it's hard to do, particularly when the CEO is the one who started the company, and it's almost like criticizing someone's child in a certain extent. But it's probably upon you when the CEO is sort of going in a direction that may not be the best, or maybe they just need to talk it through. I'm guessing that falls upon you quite often.
I think it falls upon anyone on the executive team to bring that up, again, because of the way we're structured. But yeah, Ben and I have had lots of difficult conversations over the 3 years that I've been there. I think, I'm very lucky in that he's a very emotionally intelligent CEO. And he's also someone who cares a lot about getting to the right answer, regardless of who came up with the idea. He takes no pride in being the only one to know the answer to a question. And so I think that he's very open to, hearing if there is a better idea, why it's a better idea. But he expects you to have done like very deep critical thinking in order to reach that conclusion.
Okay, great. I'd like to talk a little about, how the CFO role, not only in your company, but maybe in the entire industry, is likely to change, and some of the strategic initiatives that you're taking on to really drive growth in your company.
It's such an interesting question, like broadly and for our industry, both as a tech company and as an alternative asset manager. So I'll try to hit all of those. I think as it relates to alternative asset managers, I think there's an increasing focus on retail or individual investors. So more and more individual investors are wanting to access the private markets. And so how you reach and communicate with those investors, I think is going to be really critical going forward. As a tech company, there's certainly a drive towards earlier profitability versus just a growth trajectory. So I think as a finance professional, that's clearly something you've got to focus on. And then in the broader context, just the evolving CFO role, there's more and more use of technology, data availability, both the timing and frequency is increasing. The use of AI is obviously going to continue to increase over time. And then as a result of all that tech kind of being embedded in companies, I think the complexity of business models continues to change. And so, the need to really deeply understand the operations of your company is increasingly important. And so strategic initiatives, I think that I'm focused on currently that relate to that evolution, threefold. I think one, focus on regulatory discipline. And so as we're seeing individual investors get into the alt space, compliance is really important. My team is responsible for the daily fund administration of our investment vehicles. And in the alt space, that work is unique and complex. So we spend a lot of time focused on improving efficiency while also maintaining kind of that high level of discipline. Secondly, I think very focused on the efficiency of our spend. So reduction in burn rate, path to profitability. And then, as an organization, we're spending a ton of time right now building scalable processes and resource models. And then lastly, I think business insights. So, we are a public filer in the complex regulatory environment with which we operate in under Regulation A. It's kind of a baby 10K that we issue. And so we have a pretty robust accounting and, close process. But we've been working really hard to improve the timing of our internally reported cash and GAAP information, and then even like other, corporate relevant metrics like on HR data, resulting in more frequent and timely information available to the executive team to manage the business.
Okay, interesting. Just a little, and we'll cut this part out too. But a couple of times you referred to the alt space.
Yeah,
I know what it meant. Is that commonly known by people who aren't in the space? It's fine.
Yeah.
I mean, I think people will probably figure it out from context, but I just wanted to.
Do you want me to do it over again?
I don't think you necessarily need to. I just wanted to, if you feel like you want to. But alt is
maybe later. I can even say the alt space, or as I mean, alternative asset management. I can clarify that in another answer.
Okay, sounds good. So anyway, in the consumer investment, working for a consumer investment platform, I think the name of the game, probably financial stability and investor confidence. So CFO, you're probably more responsible than just about anybody in those two areas. So what's sort of your strategy and approach to that?
So I think in a direct to investor model, where the capital inflows and outflows are coming directly to and from retail investors to us. There's no financial intermediaries here. I think the biggest challenge unique to our platform is just knowing that we're executing on behalf of individuals directly. And I think two keys there are our technology and transparent communication. And so, from a technology perspective, we have a foundation of just really incredible software that we built internally to handle all of the individual investor facing side of the work. So today, nearly all of our fundraising comes through our website or mobile applications. And, it's critical that we have an excellent engineering and product team and talent that manages that software and that we maintain that talent. I think the second piece is transparent communication. So we're 12 years into building Fundrise. And so there's a lot of experience in working direct to consumer. I think one of the biggest takeaways I've had since joining Fundrise is how important that transparent communication is to our investor base. And so, we can reach them directly. We know who they are. We have their email addresses. We're not working through some intermediary like you typically do when you're purchasing into a mutual fund. And so we use that channel to tell them what's going on, let them hear directly from us, including when we make mistakes, versus, putting all that information in a regulatory filing and expecting them to find it at some point. So I think that's kind of what the strategies that I would say are critical to the direct to investor platform. I think more broadly, there are unique challenges for managing finances across multiple portfolios and including of an alts business or an alternative asset management business. And the two keys that I think a lot about are cash management and regulatory excellence. And so, cash management for this type of portfolio and again, across multiple portfolios requires intense precision in the work conducted by the treasury and portfolio management teams. And so that goes back to talent too, like making sure you've hired, high integrity, high humility, high curiosity people who won't ignore a problem, will ask, the stupid, silly questions, and who will be interested in kind of iterating on their processes over time. And then, the second piece, regulatory excellence, again, very fundamental to our business model and to the alternative asset management space. One of the reasons I felt comfortable joining a startup from the SEC was because of, Fundrise's intense dedication from the beginning that they've applied to compliance. So it's something we think about. It's not sexy, but it's necessary. And, it's something that we spend a lot of time thinking about.
No, it's not sexy, but it's probably, it's probably one of the most critical things one can do in a company like yours. So, and I want to get back a little bit about technology and,
Sure.
how it affects, the internal functionings of Fundrise, finance and otherwise, but also, how are you using it for the customer experience? Because I'm thinking that the person with the best technology wins in a lot of cases in your industry.
Yeah. I mean, I think that's right, especially as more and more asset managers are going after the individual investor. Having technology is critical. It's really, I would say, hard to quantify how big of an impact it's had on us because its impact is beyond huge. It's the whole reason we're able to do what we do, which is offer alternatives in a diversified portfolio for a $10 minimum investment. Without that, we wouldn't be in the business of serving individual investors. We would not be able to accept capital, redeem or send out distributions to 400,000 individual investors and at a $10 minimum. It just wouldn't be cost efficient without technology. So it's been critical to building our business. And I think that extends into the finance operations. A great example of that is the tax software component of that capital raising software. And so, we are able to accurately prepare and distribute over 1 million 1099s a year to our 400,000 investors.
Ooh.
And that's using just a couple of engineers and tax accountants, but because of our internally developed software. Wow. So, that's one example of an impact. We'd be paying millions of dollars to have that done if we outsourced it. More broadly, as we continue to build tech and including with AI, I think another example in the last year to your question about the investor experience, this is probably a common AI integration at this stage of its development, but, we've focused on several AI-based investor support initiatives, customer service builds And those have reduced our support cases by more than half. So getting answers a lot quicker to investors and, sufficiently such that they close their inquiry.
Wow. You said you do 1,000,000 1099s?
Yeah.
Well, I'm going to let people know approximately how old I am. I used to work for a company where we printed them ourselves, like on a dot matrix printer. We did like 50 1099s and a couple of hundred W2s. It was like a day for multiple people. So
Yeah. I mean, I can't even imagine doing it without our software at this point. And, even when we deliver to the IRS, I've heard horror stories of when they did have to print them out in the early days. But of course, now we can electronically submit. But yeah, it's a huge undertaking. And without the software, there's no way we'd be able to accomplish it.
Well, my nieces and nephews get annoyed with me when I share stuff about how hard it was when I was young. I've officially become my mother and father. But like my first computer, we filled it out. They were like small cards, and you had to fill out oval circles with a number 2 pencil and send it to a card reader. They think I'm making this stuff up. That's what we did. So, but the technology.
Incredible. Yeah.
So what your company's doing was unthinkable to the young version of me. So, but getting back to the company and something that the listeners might actually care about, you're in an industry that it's inherently risky. So, what is your strategy to mitigate the risk? And as a CFO, how do you balance the risk-reward ratio for your investors?
Yeah. So I think our model does two things that I think hit on this question. One, it allows access to alternatives for individual investors at a low investment minimum. So not requiring them to over allocate to alternatives if they were able to access it otherwise. So again, that $10 minimum, very different than even like a B-REIT or something you might find for $25,000 minimum or $100,000 minimum. So I think that's a big shift that's allowed people to get into alternatives in a way that mitigates risks. And then two, it does so in a way that disrupts the old models for alternatives that we think results in lower volatility in return. And so I'll give you an example of that. With real estate, we've effectively eliminated the middlemen that are so rampant in the REIT space. We have a vertically integrated business model. So we have a real estate operating platform that does all of the asset management, capital markets, lease servicing, debt servicing, development work. And we don't charge the promote or carry that real estate operators have historically charged. And I think, one, that gives back so much of the investment return back to the investor. But two, it aligns incentives so that we aren't incentivized to take these huge risks to achieve that promote. And so I think, therefore results in lower volatility. And then, I think as it relates to my work specifically, in my role at Fundrise, my team, my work is primarily focused on, again, operationalizing that model through an investor servicing platform. So that's a lot of fund and property accounting work and compliance. Back to that sexy topic again. And I'll give you
the word glamorous going forward. Rather
glamorous. Yeah. Okay. Back to that glamorous topic. An example, my team and I spend a lot of time focused on our valuation process for the investments in our investors' portfolios, both the compliance of that process and the accuracy. And so as an accountant, you probably know the range of reasonable pricing for an alternative asset is wide, and they're much harder to value than, a public stock that's traded on a daily basis and has an observable market price. And so we work really diligently to ensure we have as much available data and information as possible to strike a price that feels like it's most reflective of the fair value so that investors, both redeeming and subscribing to the funds, have a fair price.
Sure. It's interesting because you clearly are a very high-performing strategic thinker. I can get that just from this conversation. And yet much of what you're responsible for is sort of the old school blocking and tackling of being a finance and accounting professional. And do you find that challenging to reconcile both of those things?
I think it's the stage that we're at as a company. So, unlike most startups, we, dove headfirst into the regulatory environment. I always say we've somehow figured out a way to operate under all of the securities laws. Didn't miss any of them. And so as a result, the finance function has really been built on accounting compliance, this regulatory excellence. And I think, some of the finance functions, the narrative, the story about the company, because of the way we fundraise as a parent company, haven't been as necessary yet. So that's kind of the next stage is building that out. And once we've, solidified kind of the scalability of the compliance processes so that, when we get back to an economy where growth, we're having this huge growth, we don't have to just hire to, keep that running, and that can kind of operate regardless of size and volume. And then we'll get to, I'll get to spend more time on some of the strategic work.
Fantastic. So I have the two final questions I want to ask of you. First, what's some advice you can give to the next generation of chief financial officers, either people who are on a path to becoming one, or maybe somebody just started their first ever CFO type role? What are the areas they should be focusing on?
Yeah, I'll keep it short and sweet because I think I've touched on both these topics throughout the conversation. But I think the things that are most critical in my mind are, one, invest in relationships, and two, be curious beyond the scope of your own work.
Okay, that's fantastic. And I also like to ask people, forgive me, I'm trying to change the reputation of finance and accounting people, but do you have like an interesting hobby or a fun fact about you that people might find funny? Or maybe even, do you have like a favorite joke?
I have one of both. So I'll start with the fun facts, and you can decide what is best for the finance profession. I think obviously I'm very interested in both health and wealth building. So my fun fact is that I'm convinced I'm going to live to be 150. I'm convinced many of us are. So a little background on that, I spend a lot of time with my own data, whether it's, sleep data, resting heart rate, blood work, impact of different activities on all of those things, and read a lot of books and listen to a lot of podcasts, but I'm by no means an expert. And I certainly haven't perfected anything for myself. I think you have to be a scientist or someone with a lot of extra time on your hands to have a deep understanding of longevity and health. And especially, as we kind of undo decades or centuries of, damaging information. But I have a lot of faith in the ingenuity of humanity. And I think the advances that we'll see as a result of technology and just this increased focus and learning in the next 10, 20 years will blow our minds. And so that as long as you preserve sufficient health and sufficient wealth, you'll be able to take advantage of those advances, and we'll all have a longer lifeline ahead of us.
Right. Do you know the name Ray Kurzweil mean anything to you?
No.
Oh, you'd like his book. The name of his book is Live Long Enough to Live Forever.
Okay.
And he has a reputation. He's made like outrageous predictions. Things, a lot of them come true. Just ask him; he'll tell you that they come true. A lot of them haven't, but one of his is that eventually people will be living to be like 1,000.
Wow!
And he's sort of doing it, based upon just improvements in life expectancy. And like in the 1800s, you'd be considered old, But I certainly would be. Heck, I'm considered old today almost. But yeah, so we're nearing the point now where life expectancy, like it's growing like each year life expectancy increases by like 3 months right now, but that number is increasing. So pretty soon we're going to be at the point where life expectancy is increasing by more than a year every year.
Yeah. And I think it's probably not going to be linear growth. We'll probably see an exponential tail at some point.
Yeah.
So Well, I love outrageous predictions. So I'm definitely going to read that book.
He's into, because I've met him, I don't know him or anything, but I've met him a number of times, and he doesn't eat food the way we do. At least when I was around him, he everything is in like pill form, and he just taking supplements all the time. So I guess there's some science to if you eat too much, that's too strainful as you get older or something.
I've heard that. I've had a hard time implementing that one, but
fantastic. Anyway, you've got a lot going on, and I know you're really busy, so I appreciate your time. I just want to give you the final word if you have anything to say.
No, I mean, this has been fantastic. I think, great future out there for finance professionals, including in the age of AI. And so, excited to see what's next. Thanks for having me.
Thank you for listening to this episode. To continue your exploration of this role that focuses on strategy, leadership, finance, and technology, listen to more episodes of the show at rockstarcfos.com. Join this revolution, episode by episode. Push yourself to achieve great things and unlock the best opportunities available to you. CFOs are creating a legacy, and it's time for you to leave your own unique imprint on the world today. That's all for now. See you on the next one.